Imagine this scenario. You're out of the office unexpectedly, and a colleague pings you because they need access to some system you have credentials for. Now, my listeners would never send passwords over email or Slack. But what about your coworkers? How many organizations out there are sending logins back and forth in plain text? Worse yet, how many just store all of their logins on a shared spreadsheet? Keeper Security's password management platform locks down logins, payment cards, and more in a patented zero-knowledge encrypted vault. Sign up for a Keeper free trial today. Visit securityweekly.com/Keeper. Workloads protected by VMware are the safest workloads in the multi-cloud. Private cloud, public cloud, any cloud. Stronger, with distributed protection to the API and everything east-west, inside, and cross-cloud. Stronger, with 3 layers of detection, trusting nothing and seeing everything, even the best hidden bad actors. Stronger, with an SE Labs AAA certified advanced NDR that brings the multi-cloud together for the win. You've got workloads, we've got security. VMware Security. Simply stronger. Visit securityweekly.com/VMware to learn more.
Welcome back to Enterprise Security Weekly. Do you have a specific guest or topic that you want us to cover in one of the shows? Submit your suggestions for guests by visiting securityweekly.com/guests and completing the form. We review suggestions monthly and will reach out to you once reviewed. All right, for this interview, Erin Kenneally joins us today to talk about a Darwinian opportunity for cyber insurance. Erin was previously the director of cyber risk strategy at Guidewire. Before that, she was the portfolio manager in the cybersecurity division for the Department of Homeland Security, where she directed nearly 20 projects. Very interesting background. She's a licensed attorney, was a technology law specialist at UC San Diego. Welcome to the show, Erin.
Thanks.
I could do your bio forever.
Thanks for keeping it short. No one wants to hear that.
Well, it's very interesting background, though. Like, I find we always have interesting interviews with folks who are multidisciplinary, who have come to cybersecurity from another background and have that, professional perspective and experience, from other directions.
Yeah, no, in terms of, I've always worked sort of at the crossroads of technology, law, and policy. And, I find that kind of cross-functional, multidisciplinary setting, I feel like I work, optimally in those types of settings, as opposed to, look, there's a reason I didn't hang a shingle and go work in a law firm, with all due respect, and I'm an attorney. I like the environment where you've got various perspectives and skill sets, because I think oftentimes people are a little bit more open-minded, and it becomes less of an echo chamber in that regard.
So, and with your current title, you just got a new role at Sentinel One as Global Director of Cyber Insurance. So my first question was, what does a Global Director of Cyber Insurance do, and why does Sentinel One need one?
Yeah, that's a great question. I think we're pretty unique in this regard. Sentinel One and other cybersecurity companies as well need someone who can understand and sort of translate how the world of cyber insurance thinks and talks, right? So we need a global director of cyber insurance for the same reason that I think that cyber insurance needs underwriters and ERMs, enterprise risk managers, and actuaries who understand the nature of cyber risk, right? It's dynamic, risk is correlated. There is a role of infosec in kind of lowering the pre-breach losses, right? So it's a two-way street, right? I think cyber insurance is at an inflection point in terms of its business model. I'm not the only one who thinks this. Folks who've been in this space for a while, I'm pretty darn sure would agree with me. This inflection point was largely a function of what's happened over the past several years with the ransomware epidemic. In fact, I'll go so far as to say that I think ransomware was the best thing to happen to cyber insurance because it was a wake-up call. I think the only way that carriers can maintain their profitability and stay afloat in this market and the and is important here, and serve the risk transfer needs of companies is to co-evolve with infosec, right? Heretofore, cybersecurity, infosec has been kind of operating its own world, cyber insurance in its own world, and we've realized, carriers have taken it in the shorts with regards to their loss ratios as a result of ransomware. The market is hardened. And what does that mean? Essentially, the demand is outstripping the supply, right? So there's this opportunity to evolve around, several interrelated dimensions. And I think the market, in order to attract the capital it needs, in order to stay afloat, it's got to embrace, I think, its role as a steward of cybersecurity risk controls and metrics. This isn't going to happen though endogenously, right? You're going to need the insurtechs, the risk techs, the cybersecurity firms like my own, the incident response firms, the MSPs, right? These are the folks who have the data and the controls to bring to the table. They're in a position to help kind of direct this evolution in concert with the cyber insurance firms. So at the end of the day, what's my role? It really is really translating kind of the semantics and the perspectives of the cybersecurity community into how the cyber insurers think and what they need. So they think in terms of, frequency of events. They think in terms of severity of events. They want to understand kind of control efficacy so that they can better guide their insureds to, buy down their risk with certain controls and whatnot. And that doesn't just, they're kind of two separate worlds. So there needs to be kind of that translation. And so that's, kind of the role of the cyber, the infosec cyber security community. I think conversely, from a cyber insurance perspective, they've got to do a better job of embracing their role as a forcing function for, these basic blocking and tackling things that folks in the cybersecurity community have talked about for a long time, right? Things like, patching and endpoint protection, privileged access management, MFA, anti-phishing technologies, ditching end-of-life technologies, things like that. So, that's kind of a long-winded way of saying, I'm a translation piece. It's got to be a two-way street. There's got to be better coordination and trust between those two communities.
And I think the answer to this question, might be self-explanatory if you look at some of the changes that are happening in the cyber insurance space right now. But I think it's still worth having the discussion and considering the question. But why is cyber insurance necessary as a separate type of insurance? Or another way of asking that would be, why isn't cyber insurance covered under some other existing policy? Why did it need to be broken out?
Well, I mean, so there is talk that eventually it will be sort of embedded across the different lines of businesses. We'll see how that plays out. But, the nature of cyber risk is very different from other types of risk. And by that, I mean, it's dynamic. You're dealing with an adversary that can think on its own, as opposed to, some kind of a static threat that you can pretty easily characterize and doesn't really evolve. A lot of the
floods,
risks,
fires, natural disasters, stuff like that,
correct,
right?
Correct, exactly. In the NatCat space, it's a lot kind of easier to bound the risk. I mean, you can have an incident that occurs, and I know I'm preaching to the choir here. You can have an incident that can occur simultaneously, across the globe in a way that just couldn't occur, according to the laws of physics, right? From an NatCat perspective. The other big one, I think, from a cyber insurance perspective is the heightened risk, the heightened correlation factor, right? So, and this is, again, a lot of, your audience can appreciate this as the amount of entropy, we'll call it, in with regards to shared technologies, shared tech stacks, shared service providers across companies is becoming kind of homogenous, right? What you're left with is a situation where, increasingly every cyber risk is becoming a correlated risk. And why that's of concern to a cyber insurer is, look, they're in the business to make money, right? So what they try and do is they try and understand where there's diversity of risk across a population, so that they're not insuring like all the highest risks and whatnot. So they want to understand the distribution of risk. They want to understand where there's diversity in that risk, so that they can diversify, what they fund, so that when something happens, they don't lose their shorts. Well, it's becoming very hard to try and both understand the distribution as well as understand where there's diversity, because there's so much homogeneity in terms of our shared technology and whatnot. So that's a big challenge.
So let's talk a little bit about what happened to early cyber insurance policies, which were basically, I don't know the insurance wording, to say it correctly, but they're very basic. They're basically, here's what you pay, for a policy of this much, and if something happens, that policy pays out. Basically, like there weren't a whole lot of footnotes or dependencies there. So if you could talk a little bit about what kind of, well, I think it's obvious what caused that change, but where we were and what we're going to in terms of modern cyber insurance policies and what people have to go through to get those now, which is I understand a very different process than it was even a year ago or two.
Yeah. So, you can think of the evolution, maybe cyber insurance 1.0 as being really the understanding of the risk distribution and diversity related to purely kind of firmographics, right? The size of the company and the industry sector that the company belonged to. I think 2.0 represented, kind of the next phase, which was the inclusion of outside-in technographics, right? So there's this whole world of, kind of attack surface management companies that can scan from outside the firewall, get an understanding, posture themselves very similar to how what an attacker would see, create kind of risk scores and risk signals around that space. And that was definitely improvement. And a lot of the models that are currently being, the predictive models that carriers are using these days are based on those outside in. But as you can imagine, that's only part of the elephant, right? There's clearly visibility bias if you're just looking at that outside in perspective. The other at least half of that elephant is this inside out perspective, which is what we're trying to bring to the equation at Sentinel One. And look, I can understand why it started out that way, right? The barrier to entry for collecting that outside in is a lot lower than it is from the inside out, right? So there's this tension and trade-off because it's relatively, it's cheaper to collect data en masse outside the firewall. A lot of it is publicly available. You stand up sensors, you can get a lot of this information, but your fidelity is lacking, right? So conversely, when you talk about getting inside the firewall data, that internal telemetry, much richer, gives you much more insight. So from a modeling perspective and risk signaling perspective, carriers are kind of salivating at getting that data. The challenge has been the cost heretofore, right? How do you get at that data? Because, you can't just, stick a sensor inside someone's network and start pulling data. So there's ways to do it. We're working on that right now. I mean, I think certainly, at one level, it's not rocket science. We look at situations with, let's say, automobile insurance and even health insurance, where, we've got all of these, sensors and telematics that are now driving premium discounts in those respective insurance areas. And I kind of laughed to myself because, we're still not doing that in the cyber realm, even though, our systems from the company perspective have been instrumented, like long before cars have been instrumented, long before we started wearing Fitbits and whatnot. So at one level, it's not an applied engineering challenge. It's really a human and institutional engineering, and I don't mean it from the standpoint of an attacker perspective, but like it's a data sharing problem, it's a trust problem, and this is where I think I get back to my initial comments about infosec and cybersecurity, working together. The last thing that will work, I think, is if carriers come in and start acting like Big Brother and judging and sort of shaming companies. They're never going to consent to sharing their internal telemetry. That's a recipe for failure. They've got to partner with companies and sort of serve as a trusted guide and whatnot, because at the end of the day, it's in both the carrier's interest and the victim company's interest to prevent these incidents from occurring, because it's eminently cheaper to buy the right controls and properly implement those controls at the front end rather than paying out an indemnity at the back end. And that's, I think, one of the revelations that the industry has finally learned, on the heels of the ransomware epidemic, is that, look, we can't continue to hemorrhage at the back end and paying out these policies, because it's just, it's kind of killing us. So, in terms of what are some of the changes that, in addition to that the industry is undertaking? Look, I think there's a spectrum of things and mechanisms that carriers can embrace to adapt to the cyber risk, and I think ransomware is on top of everyone's mind these days, and it involves, again, a number of stakeholders. So you think about things like mandatory incident disclosure. We've got that for data breach. We don't have that from ransomware. And when you think about where the cyber insurance industry is kind of the most mature in terms of its underwriting and its modeling, it's data breach. Well, why is that? It's because there's been forced disclosure of incidents, right? This notion of knowing what the denominator is in terms of numbers of incidents has always been a problem in this space. So that's one mechanism, mandatory disclosure regulation. I think understanding, having better data-driven risk models, that's a function of having better data input. I think having things like cyber extortion policy reform, like not paying out ransoms in many cases, will be helpful. Those are helpful, but I think ultimately the top two, I would say, that carriers, need to embrace more, and we're seeing this, is embracing the requirements for information security prevention and mitigation controls. I mentioned some of those before, right? Endpoint, anti-phishing, PAM, MFA. And then also incorporating better security metrics, right? So going beyond just the outside in, incorporating internal telemetry into their risk signal collection, into their modeling. So yeah, I think that's the path forward.
Yeah, it's a really interesting position that we find ourselves in, because for a long time we've been struggling to figure out, because generally, large companies, they have a breach, they're not incentivized to share the details of how that breach happened, what mistakes they made. But now, that many of them are depending on insurance, like the insurance providers are getting those kinds of details. So if not already, before long, insurance providers will have a much better idea of how breaches work, how they happen, how they can be prevented, than the average defender will. So hopefully some of that, gets publicized, maybe they share some of that, but yeah,
absolutely. I just wanted to put a finer point on that. Just, real quick. There's this notion, I think there's two levels of it. There's this notion of, okay, we need to do a better job of sharing information, right? I also think that, let's be super cynical. Let's set that aside and say, well, no one's ever going to open the kimono. I do believe, though, that there's another untapped source of information that carriers are sitting on already. And we're leaving a lot of collective intelligence on the floor, and that's in the claims department. So right now there's an incident. Let's say there's an incident. IR comes in, collects a whole bunch of data. Well, only a minuscule amount of that data is making it into the claims. And this is for legal reasons, and legal reasons that I would argue really are not justified anymore. So this data is getting locked under legal privilege. I'm not saying that it's always unjustified, but at the end of the day, companies and insurance carriers are losing money on the business interruption costs, not on the litigation costs associated with if there's a breach. So the point I'm trying to make is, if we had more detailed IR data incorporated into the claims data, carriers can then take that and use that as a risk signal at the front end, right, and help, again, refine their models and make them, reduce the uncertainty, because you're going to have a better idea of, from a causal perspective, if not correlation perspective, which controls were in place, weren't in place, what worked when this breach occurred, and what was the loss as a result. So, it's this virtuous cycle that, they're sitting on now, and I think they could, relatively easily extract a lot of value from that.
So just to clarify and make sure I understand what you're saying, I was under the impression that the insurance provider would get the full details from the incident responder, whoever they bring in. And, I guess some of that assumption comes from the fact that they usually dictate what firm you use. If they're gonna pay out a policy, they usually have some kind of list saying, here's our preferred incident responders. But it sounds like you're saying they only get for the claim data, they only get part of the detail from the incident responders. They don't get the full report.
Yeah, so the level of detail varies. So I don't want to paint every carrier and every IR firm in the same bucket, but let's just say that the amount and the detail of information that's collected by IR is, pales in comparison to what actually makes its way into the claims record. And again, why is this? You're like, wow, this is dumb. This doesn't make any sense. This is a legacy of what was instituted because, of course, there's law firms involved, right? And they were concerned, so they privileged all this information because they were concerned about it getting disclosed in discovery when there's a lawsuit against the breached company, and that information, that causal information, getting out there. So then it became all privileged. And so now we're kind of dealing with a lot of convention that doesn't necessarily make sense anymore, because the losses, like I said, are not coming from those class action lawsuits, in litigation. The losses where, carriers are hemorrhaging, where companies are hemorrhaging, especially with ransomware, is in the business interruption costs, right? Companies are getting shut down. You got to, when you go into the ER room for the gunshot wound, they're not going to start giving you all sorts of, vitamins and whatnot. You got to stop the bleeding, right? The bleeding now is in the eye losses. Exactly. So.
Yeah, and it's frustrating to me because you don't need to know the identity of that gunshot victim. You don't need to know who the companies are getting breached for that data to be useful in helping to, better measure risk and figure out how to prevent future breaches. So it's kind of been a frustration side research project of mine is doing postmortems on breaches in the few cases, very few, maybe a couple dozen at most, where we do have that level of detail where you can really understand how the breach happened down to, people, processes. There's interviews with people that were involved, like to that level. Pretty interesting. Learning a lot here already. I love having these interviews just for, personally, some of these questions have been digging at me. And I always learn stuff. I think one thing you mentioned when we were preparing for this, you're talking about like some of the some of the things that would cause an insurance provider to maybe pull a policy or maybe not renew a policy. So I think it's interesting that some of these insurance providers are getting into that level of detail where they can now be selective about who they give a policy to.
Sure. Yeah, I mean, I think there was a little bit of an overcorrection there because, literally it was kind of a hair on fire situation. So, I'm aware of carriers who've gone so far as, not renewing a policy simply because the open, RDP port, may be exposed. I mean, I think there's going to have to be another self-correction because, I don't know that that's the best metric to grant a policy or a renewal based on. And I think carriers are getting savvy in that regard. And they're looking at, again, this notion of what's kind of the core tech stack, the lower bound that companies are going to have in place in order to attain a policy. And then you can think of other scenarios where, depending on how good your protection mechanisms are and, your metrics that back that up, you may be looking at, reduced premiums. So it's all about incentives in that regard. And look, even 3 years ago, carriers would not be able to do this because it was a soft market, right? So the supply outstripped the demand there. So if carrier A were to go to Joe's Pizza Shop and say, oh gosh, sorry, we're not going to renew, you've got an open RDP port, Joe would say, that's fine by me. And he'd walk to the next corner and he could get a policy from another carrier. But the hard market has changed the game dramatically in that regard. So no longer, and I think it's a good thing, right? Because at the end of the day, what is incentivizing, companies to embrace cybersecurity other than some sort of positive or negative forcing function, be it a premium reduction, be it, not getting a policy to begin with. We live in a world of carrots and sticks, right? And that's just human behavior. And institutions, react in the same way.
Well, and I think that's what's interesting to me is oftentimes we think of, actually coming up with the pricing for the policy and stuff like that as being a point in time thing, that happens when you apply for the policy. They ask you a bunch of questions, if it's life insurance, they might take blood pressure, stuff like that, look for risk indicators. But now I'm hearing stories of insurance companies that are real-time monitoring their policyholders. And you were talking about like shaming them for things, but I haven't seen shaming as much as just kind of nitpicking certain decisions and infrastructure changes that companies are making, which is kind of insane to me. Like I don't know who at the insurance company is doing this or how much experience they have in tech, but the idea that my insurance company calls me and says, "Hey, why'd you open this RDP port?" is a bit surreal.
Well, and I don't disagree with you, right? Because it ultimately it gets back to this, what I mentioned before, this notion of trust, right? So if you're going to get judged or have something taken away or given to you by someone whose knowledge and skills and abilities you don't respect, it's not going to end well, right? So this is where the carriers need to start walking the walk in terms of, not being so knee-jerk and saying, oh gosh, you got open RDP, you're out, kind of a thing. That does not engender trust. But it's a dialogue, right? They've got to talk to their insurers. The insurers have to feel confident that they're dealing with someone who's competent, right? And again, this, from my perspective, as someone who's coming from the standpoint of a company that's providing those internal signals, that's helping the carriers kind of orchestrate all these signals into something that makes sense. I think it's necessary, or that this evolution is never going to happen. And what does that world look like? Well, that world looks like what it's looked like in the past, which is to say, carriers face high loss ratios, they react at the level of commerce, which is to say they jack up premiums, right? So they lower limits, they increase deductibles, they really restrict what's covered. That's fine. They may end up profitable as a result of that, but they also, this gets back to my first statement, they're going to leave a ton of companies on the cutting room floor who need that risk transfer. And look, the goal of insurance is to provide that safety net so that companies don't have to worry about everything. They can innovate. They need to do their part and meet carriers halfway. But you're never going to bulletproof everything. There's, insurance has been with us for a while. It serves a valuable purpose. So in order for it to kind of attain its, live up to its mission, those dynamics have to occur.
So as we wrap up this conversation, what gives you hope that we're moving in the right direction? What have you glimpsed that you hope is the future of this?
I think the very fact that the position that I took was even created gives me hope. I think the fact that I've had a number of conversations with carriers and with brokers who are saying outside in is not enough. We've got to also include that internal telemetry in our modeling. And also, I guess the third piece would be, explicitly communicating that, look, we've got to prevent these incidents. We can't keep paying out at the back end, which means we've got to understand from a control perspective what needs to be in place before we issue a policy and throughout the life of the policy, because things change as well. So it's that broader measurement, it's that ongoing, I'll call it monitoring, and then ultimately that's going to produce better models, because right now, the models, the confidence in the models are not there, and rightfully so. We haven't been feeding those models with the whole elephant, as it were.
It's interesting. In our last interview, we were talking about how the best incentive for doing better with security is having a breach, and we're talking about an industry that, cybersecurity, cyber insurance industry is concerned with nothing but breaches. So I guess it makes sense, it's weird to think that they might be in the best position to fast track some better solutions here. But
yeah, look, what's the alternative to government? And the government can do a lot, but I don't think it's unrealistic to kind of, regulate our way out of this. There's got to be other, again, I overuse the term, this forcing function. And I've felt for a long time that the carriers have been in the best position to serve that role.
Yeah. Yeah, no, it's been a great conversation. And I think that's a great point to end on. Erin, thank you so much for joining us today on Enterprise Security Weekly.
Thank you. I appreciate it.
All right, we'll be right back in a few moments with the weekly enterprise news.